Okay, great. So let's start. Let me start by showing you guys, first of all, the dashboard. This is how I start off my sessions with Fintel. If you're a registered user and a paid user, you'll basically have this dashboard. And this dashboard is basically kind of where you start off with everything. You can see I have a little heat map here of the stocks that I'm following. Over here to the right, you can see stock lists, and I can show you more about that later on. You can see things like news over here. You can see SEC filings and so forth. And really what I try to do is I try to kind of break down and filter all of the data that Fintel provides and give you a unified view based on the stocks that you're interested in. Now you can add tickers to your dashboard simply by typing them here. I won't do it right now, but you guys can do that whenever you get a chance. And that basically adds stuff to your dashboard. You can also create stock lists. I'm not going to spend a whole lot of time with this right now because this session is really about the data. But we have a lot of questions about how to add and remove stuff from the dashboard, and so I want to mention it here. You can come here and click on an X here, and it removes it from your dashboard, and you can create more lists here, and you can add things to them. So this is really kind of how you add and remove stuff from your dashboard. If you want to remove and add create alerts, then you're going to come over here to company alerts, and you're going to say I don't want to subscribe, or I do want to subscribe to an email alert. So I think it's important to mention these things in this initial session here so that you all know how to do this. Now, in terms of finding stocks and finding securities and finding the data on Fintel, the search engine is right here. So let's just start off with Tesla because I like to use that as an example. I'm going to type in the ticker here and I'm going to see all of the results here. Now, typically what happens is that we've got a bunch of data pages on Fintel, and we have a bunch of SEC documents that are in Fintel as well. So what we're going to do is we're going to show you the data pages that we have first, and we're going to show you the SEC documents after that. So ticker search, I see a Q&A over here. I'll come to the Q&A here in a minute. So in Tesla Motors here, we see the institutional ownership, we see insider trading report, we see an overview, and we have short interest. There's more data than just these 4 pieces here. But for now, I'm going to click on the institutional ownership because that's the one that most people are typically interested in. Okay, so let me show you kind of what this looks like. We have some high-level metadata at the top. We have some related securities here. Fintel also has information on bonds and fixed income and other types of securities as well, besides just equities. Down here, we have the institutional ownership. So you can see that the institutional ownership seems to have gone up quite a bit recently. We have these institutional put-call ratios. This is basically, let me tell you what institutional put-call ratios is because it's kind of interesting to me. If you're looking at just total ownership of Tesla by an institution, by the total number of institutions, what you're going to find is that there's a lot of investors like Vanguard and BlackRock that are passive investors or index investors, and especially since Tesla is going to become part of the S&P 500, all these index funds are going to add it, and that means the institutional ownership is going to go way up. But these passive investors don't really do any analysis; they're just kind of passively investing. So their contribution to the sentiment indicator is really kind of doesn't really matter. So if you could find a way to kind of get rid of all the passive investors and just look at the total ownership by people who really think about what they're going to invest in, then that would be great. And that's what the historical put-call ratios are. Passive investors, passive funds don't buy puts and they don't buy calls. They don't take any option positions at all. Hedge funds do, and I would say the smart money does. And so looking at the total number of puts over the total number of calls, to me, is a very, very interesting sentiment indicator for institutional money. Okay, and that's what this is here. Let me see if there's any questions here. I'll pull up the chat. Okay, no questions. I do see a Q&A, but I don't know how to pull it up right now, so I'll come back to that in a minute. In addition to the, and this data is sourced from 13F filings, these new import filings, which are required of all funds, ETFs and funds. 13Fs are required of every institution that has more than $100 million in assets under management. So basically that means It could be a hedge fund. It could be an ETF. It could be a fund family. So like Vanguard has to file. It could be Carl Icahn. Carl Icahn has to file because he has more than $100 million in assets under management. The import filings, which are new, are required to be filed by any fund or ETF, no matter how much money they have. So you can find a fund that has only $1 million in assets under management. It still has to file an import filing. 13Ds and 13Gs are required by the SEC for any company or any individual or any entity that basically has more than 5% of the shares of a company. So, you're going to see a lot of companies that like, you're almost always going to see BlackRock, and you're almost always going to see Vanguard or Capital World because they're such big funds that they're going to have at least 5% of a company, of any like large company. But you can also get some interesting insights here as to seeing like who's investing. They have to say what their total number of ownership is. So you might say, hey, Wilton, here's a company that's got 0.9%. So you just said it's a 5% threshold. Well, once a company gets 5% threshold, it has to continue to report until it's down to 0. So when you look at this, what it means is that most likely T. Rowe Price had a 5% stake at one point in time. They became required to file, and they've been lowering their position over time, and they're still at 0.9, and they haven't fully divested. And you can see here that their most recent change was a drop of 82%. So they're going to have to continue to file until they're completely divested of Tesla. Likewise, these other companies all had reached a 5% threshold at one point in time, and are divesting. Now down here, we actually get to the actual real, list of ownership filing, the ownership data here that comes from the imports and the 13Fs. Now, the imports and the 13Fs both are typically treated the same way. The 13Ds and 13Gs aren't really on a filing schedule that's very regular throughout the year. They all have to file around the beginning of the year. So you see 213, 212 here, but they only have to file again if there's a significant change. So you're not going to see a quarterly 13D or 13G. You're only going to see these whenever they change. Whereas in contrast, the 13Fs and the import filings are required every quarter. The 13Fs are on a strict schedule, 45 days after the end of the quarter. So that means for Q1, that would be 3/31 plus 45 days. So that's basically April 15th and so on. So here we have basically a 13F amended. Okay, here's an import filing. You can see that this is an ETF. This is a person here. And we show you basically, if it's a new position, we highlight it in green, and the shares change. So you can see a lot of people here are increasing their ownership quite a bit. And that's, you can see an index fund here and an index fund here. My take on this is that the news that Tesla is going to go into the S&P 500 is probably driving a lot of this acquisition, but that's just my own speculation. Let's see if there's anybody in the chat right now. Okay, so let's keep going. If you want to find more detail on one of these situations, so for example, let's take a look at Janus Henderson U.S. Managed Volatility Class. You can click on this, and this is going to show you the kind of combo of the investor and the equity itself, or the security itself. And I can show you that this company, this fund, first started, first disclosed. I say first disclosed, but the import filings are only about a year or two old. And so, you might think that that a fund just recently bought Tesla, but it might actually just be that the import filings were only recently required for this company. So, and it had them all along. So here we can see the full history, effective date. It shows you the end of the quarter. And again, let me restate what I was saying earlier. The data here, we show you the file date, which was 12/02 today. This was today or yesterday. But that doesn't mean that the actual trade date was that day. Again, remember the file date is the day that it's filed, but with 13F filings, it's as of the end of the prior quarter. So this would have been, if we go in and look at this 13F filing, the actual effective date, I have the effective dates in here, is actually as of September 30th. And you can see that this was an amended report. It replaces the prior one, and they believe there's some kind of mistake there. So that's what they fixed. Okay, I see these Q&A. Let me see if I can figure out how to do this Q&A here. I'm not sure why I'm not seeing this. I'm gonna mute myself. So the question is, what is the blue line chart behind the output call ratio graph? That is the actual share price. Okay. Now, the company that we get our share price data from doesn't actually go back and restate the share price whenever there's a stock split or something like that. So that's why you see this kind of big buildup and then drop here. I'm not happy with that. We used to actually have share charts on the site, and I took them down when I realized that was happening, but I haven't taken them out of this yet, and I haven't found a new supplier. So I'm working on trying to find a new supplier for the pricing data that will show proper historical data, but I don't have that in place yet. And so the next question is sometimes when I add the ticker to the stock list, it doesn't link to the right. Okay, so I'll look at this a little bit later, Terry or Tay. Okay, so let's keep going here. I don't know if I can tell you any more about this than what I've just told you. If you want to do a search for somebody like Vanguard, you can put your you can put your cursor in here and do a search. One of the other things that's important you need to understand is that there's an issue of double counting in ownership data, and this is a problem that is not specific to Fintel, but it's problematic for pretty much every company that provides this kind of data. The issue is kind of simple, right? Here you have Vanguard Group, which is one of the largest asset managers, not the largest asset manager in the world, with I think $2 or $3 trillion of assets under management, and it has to report at a company level 13F filings, and you're going to see that it's reported 42 million shares of Tesla. It's a lot of shares. But you also have all of these other ETFs that are funds within the Vanguard. And if you think about it, there's going to be some double counting in here. And there's not an easy way to solve that, but we're working on trying to figure out how to do that. Now, we actually do solve for a lot of that in this total number up here. So the institutional shares, we do our best to try to eliminate double counting of that. But we do see these kinds of issues crop up. And the other thing I wanted to mention is that we oftentimes find situations where the institutional shares is over 100%. And obviously we don't like that. We try to figure out what the root cause of that is as quickly as we can. But even within the 13Fs and the double counting issues, we have issues where a company might have done a reverse split after the fact, after the reporting period. And so the funds reported a certain number of shares, but then they all had a reverse split. And so they actually have fewer shares, but they haven't reported yet. And so there's a lot of situations where you'll see the total number of percentage of shares might be over 100%. And that doesn't mean that there's something wacky with the data. It's just this kind of an artifact of the reporting periods and the fact that there's double counting in the 13Fs and in the import filings. So, and I wish I could do something more about that, but there's not really an easy way around that right now. Okay, so let's see what else we have here. Any questions about this? I see a couple more questions. Let me see if I can find where my questions are. How do you calculate shortages on a daily basis? We'll get to that. How do you see which stocks are held in common by venture funds? Okay, so good questions. Let me come back to, let me keep going with, these are good questions. I want to keep going down the path of the data here because there's data in here that I think is important. Besides the ownership data, we can also show you, oh yeah, here's something interesting. With 13F filings, the institutions were not required to report short positions. But with import filings, the funds are required to report short positions. And so what you have is a situation where you can actually see who is reporting short positions. So for Tesla, you know, we always say, oh, the short interest is such and such. I wonder who's got the short positions. With Tesla, we can actually see that there are 31 entries that are funds that are reporting short positions, and you can actually track them right here. So in this case, this company had 949 shares short, and it now has 3,844 shares short. So it's actually increased its short position significantly. Here's another one with an increasing short position. These are all basically long short funds, or alternative strategies, or or so forth. But prior to these import filings, you were not able to ever really kind of get a list of who was shorting a company, and now you actually can here. And this is available for paid premium members, obviously. You can also see, if you're interested in mutual funds, you can see who are the top mutual funds. If you're not specifically a person that buys individual stocks, you can see which companies have, the largest, which mutual funds have the largest exposure to Tesla, and so on with the ETFs and so forth. So that's really kind of the background on the ownership data. I want to talk about insider trading data now. Let me just check my Q&A here. Okay, same number of Q&A. I got some chat on the side. Hang on a second. Am I familiar with the old NASDAQ? I think I might have just answered that. When they reported 13D, did the buy sale happen that day? So for 13D and 13G filings, they're required to file within basically 10 days, I think, if it's a 13G, and I think just a couple of days if it's a 13D. The difference between a 13D as in Delta versus a 13G as in Golf is that if you're a passive investor like Vanguard, then you are considered kind of a less risk, or you need to be monitored less, and so you get to file a 13G. That's G as in Golf. If you're an activist investor, such as like you're going to, like Carl Icahn, you're going to take a position of 5%, and then you're going to try to influence management by forcing them to elect one of your board members, or that kind of thing, then you're considered to be an activist investor, and then you have to report a 13D as in Delta. Now, there is a lot of academic research that says that activist investors have a outsized positive impact on share prices after they take positions. And I've always said this, and I've always believed that following 13Ds on Fintel are a really good idea. And I don't always find people who necessarily take that advice, but 13Ds are important, especially if you can find a company that does really well. And if you find that there's a new 13D being invested in a company that you're following, then you should really look at that and see who's filing that form and what is their track record. I hope I answered that question. 13Gs are good because everybody loves to have institutional investment, especially if it's a small company, but they're much less, there's much less significance in a 13G form. We do send alerts for 13Ds as in Deltas. We do not send alerts for 13Gs because a lot of people ask me about that. They sign up and they say, oh, I see a bunch of 13Gs, but I didn't get any email alerts. Vanguard has a position of at least 5% in almost every publicly traded company in the United States. So on February 12th, when it has to file its 13Gs, it sends out, if we were sending out 13G emails, we would send out an email alert, 28,000, to 28,000 companies. It would be a big mess, and a lot of people have complained about that. So that's why we don't send out alerts for 13Gs. I want to talk about insiders now. It's 9:21. We're doing pretty good on time. Insiders, let me just kind of jump to the overall insider page here. Here we are on the stock. I can go up here to the top of the insider trades. So let's talk about insiders. Insiders are basically, I'm going to use the definition of the SEC. The SEC defines insiders as there's three definitions: somebody or some entity that owns more than 10% of the shares of a company, an officer of the company, so that would be like a named officer, so like a CTO or the CEO, the chairman, a VP of sales, a VP of revenue, chief operating officer, that kind of thing, or a board member. So if you're on the board of directors, then you're going to be an insider. Now the SEC says, okay, we're not going to make all insider trading illegal. Like, it is legal for boards of directors or officers or 10% shareholders to sell and buy shares of their companies. There's no reason why we wouldn't allow that. What's illegal is if somebody is buying or selling shares of their companies and they have material non-public information. This is the kind of the key phrase here. Material non-public information. So for example, if I'm an officer of the company, I'm the chief revenue officer, and I know that the company is not going to hit its revenue targets for this quarter, and I have that information in my hand, and I go out and I sell my shares before the revenue numbers are announced, then that's considered material that I held material non-public information, and that would be an illegal insider trade. Now, because it's material, right, and it's not public information. Now, if I am a chief revenue officer of that same company, and I believe that the industry is going to do well, or my company is doing well, but I don't have specific numbers, and I believe in what I'm doing, and I go out and I buy a bunch of shares, or if I think that the industry is not doing well, or whatever, and I sell a bunch of shares, that's not necessarily considered material, right? So that's kind of how you kind of have to look at this, okay? Now, that said, there's been a lot of academic studies, and time again, the evidence comes up that insiders tend to beat the market whenever they're trading in their own shares. And it doesn't mean they're making illegal trades, but they know their business. They know their business really well. They know their industry really well. If they feel like their company is undervalued, even if they don't have material non-public information, they might be buying shares. And if they feel like the company is overvalued, they might sell shares. And so looking at the buying and selling of insiders is a really interesting and valuable technique for trying to kind of like, it should be a tool that you should have in your toolbox. Here's another Q&A. Let's see if I can get this question here. Okay, these are all good questions, and I'm not going to be able to answer them all right here. The question about how do you deal with shares before and after the split? We don't do anything with it, right? The data comes in, there's a share split, and then the numbers are going to be inaccurate until they're re-reported by the institutions. It's a problem that we have. It's a problem that everybody has. We don't have the ability to go through and do that right now. Maybe someday we'll get to that, but we don't. You have to, if you know that there's a stock split, you're going to have to do the math yourself for now. Let's talk about insider trading. So here is the Tesla Motors insider trading report. Now, as I said to you earlier, the insiders are significant. They're interesting. I have the entire roster over here to the right. This is basically this is created from the list of insider forms that are filed. When a company first goes public, or when a person first joins a company, they have to file their initial insider shares. That's a Form 3. Anytime they make a trade in those shares after that fact, they have to file a Form 4. So the Form 4s are really what we're looking at here. And they have to file a Form 4 within 2 days of making a trade. So here you can see, I'm starting down here at the kind of the bottom of the page to see the transaction history here. You can see all the trades here. The trade date here was 11/17. We send out the alerts as soon as we get them. The actual file date is going to be something different, probably 2 days later. I used to get a lot of complaints from people that they would say that the alert came late, and I would look at the email, and the email would have came on the day that it was filed, but the trade date was the 11/17. So don't imagine that you should have gotten an email on the 17th because the trade date says the 17th. The actual filing date might have been the 19th. Okay, we send out the alerts via email. this like within seconds of us getting them, and we get them within seconds of them arriving at the SEC. This has been kind of in place for a long time. It's been well tested. I don't typically have a lot of problems with that. If you want to see the actual form itself, you can click on the for here, and it will show up over here, and then you can go look at the actual form. Here's the reporting person. Here's the company. This person is the chief financial officer. It's common stock that they have. The transaction was on the 17th, so this is actually done the same day. So that's good. The transaction date. Oh, it was filed on. If I can find the file. So I don't have the file date here. It was a sale for 1,250 shares. They disposed of the shares at this price per share, and then they still had 55,000 shares after the fact. This is direct ownership. So indirect ownership could be like a trust. It was filed on the 19th. So that's what I was saying. This person filed this form 2 days after the trade, which is typical. So we basically summarize all that information in this table here. It was a sale, it was direct ownership, there's the share price and so forth. We look at what they had before and kind of tell you what the value of their holdings are after the fact. We also look at 10b5-1 forms. So if you were to go look at this again, it would probably have mentioned that it was a 10b5-1 form. And what is a 10b5-1 plan, I guess is what I should be saying. Well, as I said, it's very easy to think that corporate insiders are trading illegally because they have all this information, and you don't necessarily know what's material and non-public or not. And so the SEC said, look, we want to be able to provide you guys a defense for being accused of insider trading. So we're going to create this thing that you can do, which is basically define a written plan that is a trading plan, and it's going to specify all the rules in advance that you have for trading and buying or selling your own shares. You're going to give that form or you give that plan to your broker, and your broker is going to trade that plan automatically for you without telling you anything. You can't communicate with them about it. So that's what a 10b5-1 plan is. It's not true. I see a lot of a lot of people say that every trade has to be made in advance, it has to be planned out months in advance. That's not true, but you can plan them out months in advance. So Bill Gates is famous. He's selling out something like some millions of shares of Microsoft every month for the rest of his life. These are all 10b5-1 trading plan sales, and so the question you have to say to yourself is that important or not? Well, I mean, it could be. Anytime there's insiders selling, it's a little bit of downward pressure on the demand for the shares per share, but it's probably not as significant as if somebody was not trading in a trading plan. I guess is kind of the way you look at it. So then how do you figure out if something is significant or not? Okay, so now we start talking about the track records here. So what I've done here is I've said, let's take a look at all the insider purchases for all the insiders in Tesla that were not part of an automatic trading plan. So this table shows the most recent open market purchases that were not part of an automatic trading plan. So on February 14th, 2020, Elon Musk bought 13,000 shares at $767. Cost basis that he stated was this, and so forth. And so this is what we do. So Larry Ellison, the CEO of Oracle, and a couple other people, mostly Elon Musk, has been buying these shares. Okay, there's not a whole lot of them, but there's enough here. And what we do here is we actually plot the performance of those trades in the following year. So in this case, let's look at this Elon Musk and Larry Ellison. These were done on 2/14 on 2020. So here's 2/14. I'm going to click on this and blow it up a little bit. 2/14 was this blue one. So the blue trade, and it went up and it got to be around day 200 and it reaches max. Okay, we only plot to the max. At some point after this, it probably fell down a little bit. But the point of this is that you can actually see that these did really well. Now, obviously, Tesla has been going up in a secular trend for a long time. So this is perhaps not the best example, but you can also see here that if you compare the purchases versus the sales, you should be able to see that, hopefully all the purchases are going up and all the sales are going down. And this is kind of how you kind of get in to figure out if somebody's actually, if there's a certain person that's doing really well and making a lot of trades. So let's take a look at, let's see if I can just pick somebody out of a hat here and say, Tesla's probably a terrible example. Let's take a look at, let's take a look at Wayfair. I think I was looking at Wayfair at one point in time, and it had some interesting stuff in there. There's some other interesting kind of top level roll up stuff here that I can show you as well. So here's Wayfair. Wayfair also has some interesting charts here. You can see that these guys are basically doing a pretty good job of winning. Every time they buy something, the share price goes up. I don't think Wayfair has been in that same kind of secular upward trend that Tesla has been in. So then the question is like, if you were trying to use insider trading as a means of discovering new securities to invest in or new securities to buy, how would you go about doing that? So you think about this and you say, okay, of all of the companies in the market right now, which companies have the most insider trading? So let's talk about that kind of the idea of like trying to find the best or the worst of the bunch. And we'll kind of get into kind of what these analytics are. So first of all, you could say, okay, let's take the total number of buyers versus the total number of insiders, and let's subtract them. And if there's more buyers and there's more insiders, then that's a good thing, right? Because you don't necessarily want to look at one person, but what if there's 5 people buying or only one, or 10 people selling? That's probably a more significant number to look at than like the dollar value, because the dollar value could have just been like one fund leaving. So that's what this net number of insiders buying is. So in this case, for Wayfair, there were 6 net buyers. So that means there could have been 8 sellers and 2 buyers. I'm sorry, there's -6 buyers, net buyers. So that means there could have been -6. There could have been 6 sellers and no buyers. There could have been 8 sellers and 2 buyers. Since this is negative, it's kind of a bad number. So if you take the total number of insiders buying, this total number here, and you sort the entire market, then we give you a percentage rank here. So of all the companies in the market, 18,000, that includes OTC traded companies, this is at the bottom 1%, so -6 in the last 90 days. So this is a interesting example of a company that has a very low ranking here. Also, the dollar volume of insider buying was -$286 million. Negative $286,000. So that's also in the bottom 0.9%, 0.19%. So what I'm getting at here is if you were looking at the total market, Wayfair would have a very negative insider trading sentiment value. Is kind of what I'm getting at here. Questions about this? Let's see if I can pull up the questions. Is there any way to screen every ticker symbol by the insider trading rank? Yes. So, so the question then is, so let me show you this, what I have up here. If you go to the tools up here and you go to latest insider trades, that's a good question. It's going right into what I was trying to get at here. I've been building a kind of a page here that shows you top picks and so forth, and it basically kind of provides a lot of that information in a ranking number. You don't have to screen for it, but it will provide you kind of the top picks. Give us a second. When a 10b51 is suspended, what does that mean? I don't know what that question means. I'm not sure what a suspended 10b51 is. I entered the stocks data before and after the split. Joseph, I'm going to come back to this one here if we've got time remaining. The way you would do this is in the combined portfolio. If you're wondering where to look, we have a tool called the combined portfolio tool that provides you with that data. Okay, so let me get back to this. Okay, so here's the insider trading report. I got to this page by clicking on tools and going to latest insider trades. And so this is going to show you some kind of like top level data here. We roll up the data into the sectors. And so there's an interesting investing strategy around looking at the sell buy ratios for sectors and then purchasing the ETFs that correspond to those or selling those. We can see companies with most insider buying, companies with insider selling, most active buyers and most active sellers. That's interesting. But what you're really looking for here is like this significant buying, okay, and significant selling. And so this is going to show you from a pure dollar value who's buying the most and who's selling the most. Now, what it doesn't have is the total number, is the net buyers and that kind of quant model that I was trying to show you. And I'm working on adding that to this. In terms of screening, you can actually go to the screener. This isn't going to be a demo of the screener, but you can actually come in here, and if you look at the complete list of terms over here on the screener, you can come back to this later on. I'm actually going to do a demo of the screener next week at the exact same time. We have insider data here, and you can do a screen that shows you the insider buyer account. So all of these are interesting metrics that have to do with insider buying and selling. And like I said, I'll be doing a demo of that next week at the same time. But the topic of this conversation today is about the data. And so the insider data, I think, is actually really valuable. And I think that there's a lot in here that can be unpacked. If you have a theory, as I do, that that officers are probably more indicative of sentiment than 10% holders, because a lot of 10% holders are typically funds, and a lot of funds have investment criteria that they can only invest in certain size companies and so forth. And so if a fund goes out and it decides it wants to divest itself from a stock, then it can do that, and they do that. And is that necessarily a negative thing? Not necessarily in my mind. But if an officer who isn't quitting his job or her job is buying and selling, then I consider that to be valuable information. So I created a screen here that shows the companies with the most insider buying based on value. There's ways to refine this, obviously, but this is a good starting point for finding companies where the officers are increasing their stakes significantly. Here's an officer that bought $5 million worth of shares. And officers are individual people. They're not going to be other people's money. It's their own money. That's why I think it's interesting. Whereas 10% shareholders are frequently investing other people's money. So it's not quite as interesting. Here's the Q&A again. Let's go back to Q&A. Insiders are suspending their 10b. Oh, I see what you're saying. I don't know if there's a way to tell. I don't know how to tell if somebody is closing or stopping their 10b5-1. I don't know that. I don't know how, because they don't actually. They do file their 10b5-1 plans, I think, with the SEC, but I don't know that we can actually tell if something is suspended. I guess the question would be, the interesting thing would be is if somebody has a 10b5-1 plan and we have a historical list of trades for that 10b5-1 plan, and then suddenly they make a trade outside of their 10b5-1, that would be kind of interesting. Or if they made a trade that was contra their 10b5-1 plan. So if all of the 10b5-1 trades were sells, and all of a sudden they made a buy, that would be interesting, because that's like a reversal of sentiment. So it's a good question, PJM, but I don't know the answer to that. There certainly is a lot in here that still remains to be mined. I still have a lot of questions that I don't have answered yet. Any chance you could add a field in the screener that is insider buying by percentage outstanding? Yes, yes. The answer to your question is yes. That is one of the things that I want to add. The other thing I want to add is I want to add percentage of float as well. Let's see if I can go back to this. If I go back and take a look at, let's take a look at significant buying here. And I'm going to go look at Foot Locker, for example. Let's just take a look at Foot Locker. So the point is that the value here is $13 million. It's not really like the price is $38 versus $1.30. So like the question is, should those two be flipped? We don't know because it's not really normalized. So sorting by raw dollar value is not the best approach to this. It's very suboptimal. I recognize that. This is kind of a starting point. The improvements to this would be taking the total number of shares and dividing by shares outstanding, so you get the total number of shares, or dividing by float, which would be much more significant. Now you know, kind of like a normalized ranking, which percentage of float or which percentage of outstanding shares are being traded. That would actually be really interesting. In terms of that, if you want to get there sooner than me updating this data, this dollar volume of insider trading buying is in the screener. If I go look in the screener here and I say, actually it's not dollar value, it's percent of float bought by insiders. You can look in here somewhere here, insider net buyer shares volume over float. So there's a screener term right there that should correspond to this. And you could actually create a screen that would show you that information, and you would be able to sort by that. So that's how you would get to that number before I can give it to you. Although it doesn't look like we have float for this company. So we talk about the ranking. Here's the company that was at the top of the list. It was it had a dollar volume of insider buying of $29 million, and it's the 99% ranking for pure dollar volume here. Any questions about this? There probably are some more. Officer buyer, does it account for 10b5? Yeah, so it's basically just the raw numbers. So it's going to say, I'm not looking at whether or not it's a 10b5-1 or not. It's just saying, okay, if there's an officer that's buying or an officer that's selling, then it's going to show up in that list. 945. Let me show you a couple more things here that I think are important. I've done ownership data. I've done insider data. I want to do SEC filings, and we'll come back to short interest at some point. A lot of people don't know about the SEC filings, especially about the 8Ks. 8Ks are really important. In my opinion, there's a lot of noise in the world in publications. There was actually a really interesting study done by an academic group that put asset managers into two groups. In one group, they said, you're not going to read any news. And in the other group, they said, you're going to read the news just as you normally do. And then they compared the returns of the two groups of managers. And they found out that the ones that didn't read the news actually performed better than the ones that did read the news. And so what does that tell you? It tells you that the news is really noisy. But if you want to stay involved and you want to stay up to date on a company, how are you going to track those events? Well, it turns out that the SEC requires every company to report material information. So, and if they don't, then they get sanctioned. Okay, they run the risk of having a lawsuit. So how do they report? How does a company report material information? What they believe to be material? They report it in an 8K if they're a U.S. company, or they report it in a 6K if they're a foreign company. So if you go to the SEC filings and you look at these 8Ks here, okay, these are all the things that the company felt were important and material enough to disclose. Oftentimes, there's going to be a press release or something that goes along with this 8K. And so we pull the press releases out of that and we put it over here. So, because it's hard to necessarily see what's going to be attached to this thing. So you can actually look at the 8K here. And if you go down, you're going to see that this is about departure of directors. Okay, that's fine. if you go over here, you're going to see this is about something else. And there's a news release here. This news release is going to be over here somewhere, okay? So I'm really trying to kind of make it easier for you to find the material news that is embedded in the 8K. So here's also your quarterly and annual reports. The thing about quarterly and annual reports, again, is that if a fund, or I'm sorry, not a fund, but if a company doesn't disclose information that's important, then it's going to get sued or it's going to get sanctioned. And so they put everything in the 10Qs. The problem is the 10Qs are so wordy, and it's hard to track what changes over them. So we built this tool that allows you to track the changes from the 10K, from different 10Qs. So if you want to know what is important to the company and what changed from one quarter to the other, you basically look at what's changed in the 10Q. You can see we're starting off here with simple date changes. As we get further down here, we can see that they're changing some verbiage here. Oh, now they're including social unrest in as a new risk factor, and so forth. And you can see the numbers are changing. So this is really interesting. If you're a filing geek like I am, then I would encourage you. If you're not a filing geek like I am, I would encourage you to dig into here and look around and see what has changed in these filings, because it really reveals a lot about what is going on in the minds of the officers of the company. Let's see if there's any more questions about this right now. Are insiders allowed to purchase stock after they are aware of a buyout? If no, they are. That would look. They're allowed to do whatever they're allowed to do. The question is it illegal? I think the answer would be, it's probably illegal. It would probably be considered material non-public information to know that they were going to be bought out, and then to go buy a bunch of shares. It's probably also the case that the company wouldn't allow it, but yes, I would say that would probably be considered part of the material non-public information. So then the question is if no, would it be reasonable to stop selling a 10b5-1 plan? Yes. So yes, the company would, in theory, the executive could go say to their broker, look, I want you to cancel this 10b5-1 plan. Now, the question is that illegal? And I think that's kind of a gray area. There has been, I think, a little bit of research done on the effect of missing trades from a 10b5-1 plan. So for example, if somebody files a 10b5-1 plan that says sell every month at a certain amount of money, and then they have some material non-public information, they call the broker and they say, don't cancel the plan this month for now. And then something bad happens and they don't sell, and then they call their broker back up and they say, okay, turn the plan back on. That's a kind of a gray area. And I think somebody did some research on that and found out that that was going on, and it should be illegal. But I don't think there's been any, I have not read any enforcement actions on that. It's a good question. I've thought about the idea of trying to figure out the frequency of 10b5-1 plans and then identifying situations where a trade was missing from where it should have been, and using that as a signal. But I haven't been able to kind of get the time to do that yet. But it's a really interesting avenue of research, I think. Okay, so I was talking about SEC documents. I really think this is important. If you guys don't read the 10Qs and these filings, you really should. There's also proxy statements. So anytime there's a vote, the proxy statements go in here. There's ownership data. There's the high-level ownership data in here. There's all the press releases for the company are going to be located in here. And then, if you're a lawyer or you like to look at agreements and contracts and indentures and things like these are all important things that are usually filed as attachments to other documents, and so they're hard to find. And so what we're doing here is we're really kind of surfacing them to make them and categorizing them for you to make it easier to see this stuff. And I think that's probably all I'm going to talk about today. It's 9:52. let me go back to the Q&A and see if anybody else has some questions here. See if I can answer some of these. So here's some chat. So the question is, how do you send the alert if you have the site open, and can it appear in your desktop as opposed to an email? I think that's a really good idea. I hadn't never thought about that before. If you want to send, let me show you guys something else here. At any point in time, there is this question mark down in the lower right-hand corner. If you click on it, you can say alerts. You can type in alerts. We have a help system here that will give you some articles, or if you have questions and you need support, you can actually do technical support, or you can suggest a new feature. So that question that you just asked about how do you make a desktop pop up, I would like you to click on the suggest a new feature and report that. So that would be a pop-up for the 13Ds. Now, in terms of alerts, okay. Okay, so we talked about the pop-ups. So one new message here. This session is being recorded. I will send you a link. I wanted to go back to the combined portfolios because there was a question about that. So the question was, how can you find out which companies are, what was the question? I don't know what the question was, but I do want to show you guys the combined portfolios here, and I'll come back to the question later on if I can find it. So one of the other things that's interesting about Fintel is that what we do is that we say, look, when you're trying to find companies that are popular or being accumulated or more interested in funds, besides just looking at the total ownership and the total ownership values, or the put call ratios, the other thing you can look at is the total number of funds that are investing in a company. So we built this tool called the Combined Portfolio Builder, and I'm going to show you kind of a pre-built version of this. Let's say you're interested in, well, let me just kind of start here. Okay, I'm going to search for a fund, and it's going to be called Small Cap Value. Or let's say I have a few funds. Let's say I have Starboard Value is a big hedge fund. I'm going to search for Starboard Value, and here it is. So I'm going to add it. Okay, and then I also know that 0.72 is a big hedge fund, and I want to look at 0.72. So here's 0.72 asset management. So I'm going to add it. And then what happens is that we take those two funds, we take the holdings of those funds, and we combine them and show you like which ones are most popular or not. So for example, what I've done here is I just added these two. We can also add something else if you want. I don't off the top of my head some more examples, but we can see that in those two funds, if we sort by current owners, we can see that there are these securities are both owned by those funds. So green dot box, Merit Medical Systems. So that's kind of interesting. I can also see that by change in owners, I can see that of those two, these two were owned by one prior, and now they're owned by two. We don't have a change in like it. So seeing like who's accumulating is interesting here. We can see the change in value. If I say like, I'm going to say Berkshire Hathaway here, but it's not a great example, but Berkshire Hathaway, I can add Berkshire Hathaway, see if we can get a third one here. So now we have a third one here. Current owners is 3. So basically the S&P 500 is owned by all 3 of them. Kind of tells you something, right? It's interesting. But now you can see the JP Morgan Chase is here. So, you can kind of build this out. If you have a bunch of funds that are interesting to you and that you're interested in following, you can actually kind of build out this tool and find some, you can use this as a discovery tool or as a screening tool to find new companies. Now, if you have specific interests in sectors, then I've basically built some for you already. So for example, there's an emerging markets. What I've done here is I've gone through all of the funds in Fintel in our database that all look at emerging markets, and I've added them all. If you click on list of funds, it will take you to the bottom of the page. The bottom of the page is right here. These are all the emerging market funds that Fintel has. And if you go to the top here, it's way to the top. Come on, let me get up here. It will show you the most popular emerging markets funds by Fintel. I guess China is considered an emerging market, or Hong Kong is considered an emerging market. I don't know, but Tencent Holdings is held by 26 of the funds. Taiwan semiconductor manufacturing, Taiwan must be considered an emerging market. So you can kind of go down here and find out which ones are considered the most popular. And if you're interested in that kind of thing, you can invest in them. I actually think that the change in owners is actually more interesting than the current owners, because then you can see who's accumulating and hopefully kind of catch that right. So Naspers is a company I have never heard of before. I'm going to go look at it after I get off the phone with you guys and kind of see what it is, because it just got 4 new owners reported holding it in the last quarter than prior to this. So any questions about that? Okay, so it's 9:58. I hope this was useful to you all. I really enjoyed this. I'm going to look at all these questions again after the fact, and hopefully I'll be able to respond to them. But if you have any more specific questions and I don't answer and I don't get to answer it, I would highly encourage you to come down here to the question mark box and ask the question here, and I'll do my best to respond in a reasonable time, and then we can even make it into a knowledge-based article if it's generalized enough. Okay, so please come in here and ask your questions in the help, and allow us to kind of record that for prosperity and for future people. So again, it's a minute before the hour. I hope you all like this, and I hope you all enjoyed it. Next week, the exact same time, I'm going to be doing a same webinar, and it's going to be all about the stock screener. If you're interested in that, sign up for that, and I'll see you guys in a week. Okay, take care and stay safe and healthy.